Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for January 3rd, 2024. As always, we'll start with the 30-minute hybrid swing portfolio, looking with Alcoa. So we had a big gap down today. That was normal. Second day of selling for the new year. So we took the standard gap and go entry, gap and drop, I guess. Standard risk box. It sold off harsh. Then when that reversed, I held as long as I could, but had to take it at the edge of the VWAP to keep that in the money. So here's the VWAP. It later made a tradable move here. I didn't take it, and it made. I think this was that was also a tradable move on the 3 minutes. I did not get that one, so we got a fractional, just a fractional win on that one. AI gap drop. Again, harsh sell-off, but it came back to the VWAP. I held as long as I could for a fraction. Amazon, no trade. Caterpillar, gap drop for an R. Again, the routine exit at the VWAP. Let's see, capital preservation stop. So yesterday we had the collapsing dragon in CLF, and we held that one overnight. So let's take a look at that one. So here's the belly of the RL10 and the PSAR flip, so that makes this entry, which was a gap down and then a sell-off. That makes this a collapsing dragon entry with a standard risk box. That thing closed here. No, I'm sorry, closed here yesterday. So we held that one, and then the gap down was to here, sold off, and then reversed to the VWAP. So I just took that one there, and that gives us 1, 2, 3, 4, about 5R. This was a tradable move. When this recovery held and established that little support level, and then broke out here at the VWAP, that was a tradable move. Didn't get it, but it was there in the metals. I was looking at U.S. Steel at the time. CVS, no trade. Disney, this was kind of a wild ride, but it had this is an example of why the RL10 acting as price gives you much clearer signals. So we have these bellies of the RL10 here. So we're getting that higher low. We caught it too. Now I want you to notice just how wide the price bars are, and so this could be very confusing in there. But if you just kind of follow the price, you get very clear turning points and then a strong directional move. And then this gives you, I'm just highlighting the RL10 in red here. This gives you that very clear kata 2 and the upward pull. And then when this reverses here and then crosses the VWAP and then crosses the dragon and then takes out the PSAR, you got 4 price levels that are indicating a resumption of the upward move, and then the test of it comes at the top of this RL10 price peak. So when this price breaks through, so when you get your entry here and it tests this and then breaks through, then you have a comfortable feeling, because now your risk box, you can take that stop, which was here, then move it up into here, then increment it up into here, and then up into here. Then when this rolls over and then starts dropping like a rock, then the upper skin of the dragon gives you a reasonable place to get out, and so that gives you on 1 unit of risk from your risk box here. That gives you 2 units of reward for a 2R trade. And so the point is that the smoothing of the price with the RL10 as price gives you a very clear set of boundaries. So now tomorrow, because this closed above the previous peak, we will still have an upward bias, and the trigger to get long again on this is going to be 92, because this is where the peak of the RL10 occurred. So if it can get above there, then that's good. So that's Disney. Disney's still in play. Devon Energy. So this was part of that long sell-off here in energy. And now again, I want you to notice the turning points in the RL10. And then this crossing of the dragon right here. So you get this nice recovery run up to 46.50, a pullback through the dragon that bottoms out here, which connects to the Bollinger Band mean. So that's simply a reversion to the mean trade. And then your dragon rolls up and then gives you that Kata 2 shape. So this now becomes a 1, 2, 3 entry. It's front running the Kata 2. The formal structured Kata 2 here would be right here. That's a reasonable entry. This is a reasonable entry as well. But because this was the only sector that was working this morning, and energy's recovering from a tactical sell-off, this felt like a reasonable effort. So on that basis, I took the entry at the skin of the dragon instead of waiting for it to break through. And the standard risk box here, protects you against going past the Bollinger Band mean. So any sell-off, you don't need to stay in that trade. Like if you're long and it starts failing, a violation of the Bollinger Band mean tells you that that's done, because the next thing that happens is that thing sells off to the bottom of the dragon and the bottom of the RL10. So you're willing to risk that much, but then you would exit here in order to protect against 2 units of reward. In fact, you could legitimately get short on a failure of this trade. If that trade fails, that's a legit short, because you have every reason to believe it'll run to there in a hurry, just like it did the last time. But it didn't. So we actually get this one. And now when this breaks through the descending PSAR, that's a statistical indicator that this trade's working. So when this does break through, when that breaks through, now by that time you should have your risk from here at least to about here, so that you can lock in that much gain. That's your no lose plus dinner for 2. And then as you start getting higher lows, you could be raising your stop to lock in pieces. I would not be offended if you took this exit to be flat by the end of the day, and if you did, on 1 unit of risk, you would have a 2R trade. But because energy was one of the few areas that had any gains today, and it's still recovering from the sell-off, I decided to keep this one, and I'm using a 2R cushion of market's money to protect me against an adverse gap. So that's one that I'm holding, and it closed very well. And then what I like is that it has cleared the hump of the dragon. It's testing the 10-day high, 30-day high. So if it breaks above about 47, then this thing can really go. And that's where I would add a second position north of 47. Check or hold. This is Electronic Arts, no trade. I do like that it actually didn't sell off today like the rest of the market did. This is actually establishing a nice support level after this long rundown. So if we get anything like upward price action tomorrow, you've already got a couple rising lows, and it's already across the Bollinger Band mean. So that one could get to the 5-day high and then up into here. So I like that one as a potential long if we see some recovery in the market. You know, there wasn't much buying pressure today. If we sort this thing by price action, the predominant mood of the day was pain. There's very little gains in here of significance. Okay, emerging markets. No trade. I like the fact that it also is bottoming and finding some support at a level that it found support before. And the last time it was here, there was buying pressure all the way up to 40.40. So we've seen a little bump today. So if this can continue and it can break out of today's high and get across the Bollinger Band mean, then that has a chance to get back up to 40.40. So we'll be stalking that one. Ethereum. This was a huge sell-off all the way to here and then all the way down. And then this gave us a little 1, 2, 3 rebound off the low. And it got into the dragon and then started to fail. So I cashed 2R and no overnight risk. This is the reason on the cryptos to take them while you got them. A bird in the hand is worth 2 in the bush as we start the new year, especially. So don't like the overnight risk on those. Mexico. So this was a compound trade. We get the collapsing dragon today. So this is the start of the day. The yellow is showing today's price action. So we get a breakdown below yesterday's belly of the RL10. So we just initiate the short, standard risk. Sells off hard. 1, 2, 3 exit. So we're out here with about 2R. And then this cannot get through the declining PSAR and starts to fail again. And when the R10 rolls over, this is one that I want to hold overnight because Mexico is extremely weak compared to the rest of Latin America and Brazil. And so using one of the 2 scoops from Markets Money, I re-enter the short and it capture another 2R and it closes at the low of the day. So that's one that I want to hold overnight, plan for the gap down tomorrow. So we clear 4R with it today. We have 2 units of that in open gains, and we're going to hold that one overnight. Now you compare that weakness to Brazil, which on the other hand recovers from yesterday's sell-off and is generally positive for the day. So I like the fact that in terms of relative strength, Brazil or Mexico was worse than Brazil. No trade in Brazil, so the trade there is in Mexico. No trade in Intel. I like that it stabilized. It did not really participate in the huge sell-off. IP, was all over the map today. Um, this looks like it's really volatile, but those are that's actually a pretty tight range, and did not find a tradable moment in there today, but it's in play. Real estate took the collapsing dragon short, cashed 2R. That also had a nice rebound. This was characteristic of the day. Gap down, harsh selling, recovery, and then secondary failure, and closing at the lows of the day. So this is one where I'm ready to and immediately get short if it starts showing weakness again tomorrow. So this is IYR and U.S. real estate. That's really a bad sign that there was for real estate that there was a lot of people willing to hold that short, even though the VWAP is only right here. That's people willing to take that to hold that position below fair value, anticipating more weakness tomorrow. So, in retrospect, that's one that if I had a chance to think about it more, I'd probably want to be short that one. Coca-Cola. Yesterday's emerging dragon, the gap up and go, continued strong today. What I decided to do was keep this because it showed good strength all day. It did not participate in any sell-off. The river is still rising. We're holding we're holding 3R as a cushion of market's money. And if we get a strong early move in the S&P, this should respond to that really well, because this was an anomaly in the large caps. This actually made money today, and the other ones did not in the Dow, generally speaking. Regional banks, gap down, initiated short. It stabilized at the VWAP. There was no buying pressure in there whatsoever. This is reaction against the exceptional strength in finance from last week, so maybe this is just profit taking. But then it collapsed in the last hour, so I definitely want to hold that one in case there's some additional finance weakness tomorrow. And we've got 1, 2, 3, 4R in hand, so that gives us a nice cushion against the adverse gap tomorrow. And KRE can be gappy like you saw today. This was a pretty big gap down, and I'd like to carry that potential overnight. So 4R in hand, holding the short position. Mattel, no trade. McDonald's, this was part of the collapse. I mean, it gapped up and then couldn't hold it, and then the whole market started falling. It fell through the VWAP. The R10 rolled over. It came through the Dragon and the PSAR, and is testing the Bollinger Band mean, which is starting to roll over. So this was a owl entry short, because the R30 is rolling over, the Dragon is rolled over, and you see the fall, and then the winter starts right here. As this was selling off hard, I had a lot of overnight exposure on the short side, and so because McDonald's would be a typical reversal tomorrow, guys want to buy a really strong symbol on sale, I decided to cash 3R to raise some cash, because this is also the price level last week that saw that much buying pressure. So this is a case where I wanted to cash 3. Merck was a big winner yesterday, and today it continued its winning ways. Let's let that draw. So the continuation of strength in Merck Gap up in after 30 minutes where it did not fail. Entered or re-entered a position with that tight standard stop. That worked really nice. The R10 rolled over. I took the dragon skin exit for 2R in the usual way. Microsoft, no trade. Marijuana. This was an amazing afternoon move. So I think there was probably some news. I didn't check, but this thing has been grinding down, right? And today it was absolutely quiet. And then there was, I think, a news event somewhere after 1 o'clock because that thing just took off like a scalded ape and closed really well. So that's a, from 670 to 720 is 50 cents. That's a 8%. That's a 8% intraday bump in about 30 minutes. So there was a lot of money being dumped into this, and it closed really well, and it's above the previous resistance level. So this has a chance to really go. We'll watch that one tomorrow. We'll be ready to take that long. Nike. Man, what is the deal with this? New trade in Nike. We're still getting on board with that one. It's the new add to our stack. Nvidia, no trade. I like that it's stabilizing. Clean energy also stabilizing after the big gap down, which we covered. So that's a case again where yesterday we had initiated the short on the collapsing dragon, held it overnight in case there's a gap. This was immediately gap and drop, and so we're able to capture almost 6R on that one as it stabilized right along the VWAP. I like that one. Rivian, tried it short, really didn't collapse further after the big gap down, so that may be finding a new support level. Treasuries. Tried the intraday 1, 2, 3 entry, entering at the skin of the dragon, standard risk, 2R as it got past the Bollinger Band mean and then started to sell off. Captured that one. Tesla was a big percent loser because of that gap. I tried the rebound play, trying to get it on sale, and scratched. Walmart. The gap and go, that failed. I took the 1R loss. Did not chase it. It closed, it showed strength during the day, but in the last half hour it failed. This is one that also started filling me with some concern about tomorrow's price action. I mean, it could be negative because when the market leader like Walmart didn't have any buying pressure, then that could be weakness for tomorrow. So 1R loss in Walmart. U.S. Steel. This was the other metal that we held overnight yesterday. It closed here. Closed here and then gapped down and then started recovering. So after it gapped down to here, cashed it here for about 4R, and then this was a tradable move up. You'll see that one in the trade of the day, and then the immediate reversal to come back into the weakness. So that's a sign of tactical intraday trading. The fact that it can gap down, run all the way up to here, and then immediately reverse there. This is the sign of tactical trading, and that means that tomorrow, if we get any kind of failure here, I'll be short. But if we are able to see some buying pressure, I'll be long. So this is a perfect compound critical state, and this is going to be a high priority for non-directional bias tactical trading tomorrow. That's going to be a good one. All right, so here is some sniper trades of the day. So these are on 3 minute. These are all on 3 minute bars. And here is the. This is the open. So this is the close yesterday. And this thing gaps down to here. And now it gives me this little Kata 2. So we would call that a Kata 2 formation. That should have been a quiz. So that's my Kata 2. And then this is the standard wrist box, which also aligns nicely with the belly of the RL10. So I'm going to put that as my standard risk. If I get a plus 2R movement, then I could actually use the 2R battle drill right here. So if price is able to get through that level, that's the level at which I can start thinking about adding a second position. So it's all tactical trades in this space. And then the only job that I have in there is to get my risk from here above my entry so that I can lock in no lose plus dinner for 2 and turn this into a science project. Now, because while this is working this morning, the rest of the market is selling off hard. So now, as I put this trade on, I'm now starting to frame the other side. And my initial stop, because of the standard risk, is here at 1. I also notice the PSAR flip and the belly of the VWAP at 2. And then I notice the low of the day on this initial surge down is at 3. So now my question is, if this starts failing right away, which one of these price levels would trigger you when to go short? All right. So let's take a closer look at that, and then if in chat, if you would put that, talk about your opinion. Just as a point of reference, this orange box represents the range stat. So from this is the maximum reasonable intraday move, a move of that magnitude. So that's our range stat. Which means that if I take the low of the day, approximately there, this price could move as high as this range stat without it being extraordinary. Similarly, if I take the high of the day and then drop a range stat, it could move that far easily and get well below any one of those three. So any one of these three positions for a short is justified because of the size of the range stat. So when it comes to standard framing, I like to see that. Okay. So let's frame the other side of this trade. And take a look at the technical signals that would tell us that maybe a short side trade is justified. So this one, just a violation of the belly of the RL10. It's also the belly of the Bollinger Band mean. So if it violates here, it's already on the wrong side of the Bollinger Band mean. It's below the VWAP. And then you would be able to get a position in here so that you'd have 1R in hand if it tests this significant support level. And then if it fails through 2, we would expect a big harsh sell-off, much like this early morning candle. So the advantage of getting short at 1 is that you have money in hand as a cushion at the real test, which is 2. That's the statistically significant turning point here. because you have the dragon and the PSAR turn. This little piece is noise. So getting short at either 1 or 2, now if it does violate through here, now is posturing. So now you got a lot of money in hand when it comes over here to test 3, which is the low of the day. So in your mind, you're thinking, look, people that don't know how to do that technique are putting, if they're long in here, and there's some buying pressure here, that's 2, this was up and the pullback started to recover. So there's some buying pressure on this thing to go higher. Where do those guys that are buying in here, where do they have their stop? If they are day traders and they just go to the low of the day, they have all their stops in the market down here. So if this price fails and comes down and tests the low of the day, imagine if the low of the day fails, this would be a rocket ship to the downside, as all of those stops would hit and all these positions that were bought in here are closed and they all revert to the short side. This would be an explosive move down below 3. So as I am considering my tactical response to failure, I want this thing to work, and I'm willing to bet that it's going long because I take the position. But as I think about the other side of the trade, if I get short at 1, I'm positioning myself to benefit from a sudden failure at 2 and certainly failure at 3. Like if I get short at 1, I don't mind taking the 1-hour loss because I would be +1, +2, and then if that failed, this is going to be a big win. And in fact, if I'm short at 1, I could consider adding a second position short if it makes a new low of the day. So I could just go ahead and put that in the market if I wanted to. So and then 2, you're waiting for an extra confirmation that this thing is failing. Like if it starts failing at 1, then you have evidence, only now do you have evidence that that's really getting painful. And then if it fails at 2, then all of the people who were buying here are wrong. And then you may see a lot of stops at this level. So 2, but what you give up for the extra confidence of 2 is that you end up giving up that gain. Waiting for 3, you could argue, hey, if there's a new low of the day, there's still plenty of range stat to the downside, and then that would really be strong evidence of a downward move, and maybe I just want to wait for that. So depending on how aggressive you want to be, 1, 2, or 3 all are justifiable as places to get short. So I see most of the votes in here for 1. So now the advantage psychologically to you as an intraday trader is, you've set up your trade and taken your shot, and you've decided what kind of evidence you need to see that this trade is working and that it's good to go. That is, I got to have 2R in hand, so you can disassociate yourself from the positive emotions of that trade because you've reduced it to kind of a rational decision-making model. And I've disassociated myself from the positive side by framing this trade in the other way and deciding what it is I want to do. So now I can be direction neutral as far as an opinion goes. There's a strong argument for a big move in both directions, and all I have to do is follow price. So now it runs up to 1R very quickly in about 10 bars. So in less than 30 minutes, I've got a nice, comfortable 1R in hand. And that's probably, if I'm following the PSAR, my stop is just here. I might want to raise it to the belly of the dragon or the spine of the dragon. So if I go A, B, or C, where do you put your stop, A, B, or C? If you put it at A, what you're saying is, hey, I have removed my risk from the trade, so I'm not going to lose any money, but I want to give it the widest possible. I want to give it the widest possible room to find itself to really go. B is I want to keep half of the maximum favorable excursion, and then if I keep B, I've got about a 0.7. That's about a 0.7 win. This one would be about a 0.2 win. If I have it at C, it's about a 0.8 win. At that point, you might as well go ahead and just take 1R win. So either A or B is legitimate to me. I think you'd hold A if you were optimistic and wanted to give it a maximum room and you didn't mind giving up half an R to do that. That would be your choice. Guess I could have made that larger. Both of them are still okay. Now this one's kind of a crucial moment in the reading of the tape. To me, you have the summer in MACD turns to fall right here. You notice the dragon rolls over. You get a PSAR flip in here. The RL30 is starting to roll over. Price has still remained above the Bollinger Band mean. The VWAP is still rising. That's good. If you had used the, this one as your stop, you still have a nice little cushion. If you had taken the spine of the dragon, you probably cashed in here. So you have a plus 0.7. If you do that, you then got to say, hey, it did not fail back to here. It did not fail, but instead, the RL10 has now crossed the dragon, and I've gotten through the PSAR, and I'm close to the high of the day. If you cashed here, you got to make a decision, do I re-enter? Now, what I want to suggest to you is that this decision should be the same as, do I take a COTA 2 entry? Let's say I didn't take this one at all, because maybe the market weakness chased me away, or I didn't see it, or whatever. Now, when I look at this, I actually have the RL10 making a higher low, and the Bollinger Band mean is rising. The VWAP is rising. It's giving me this little upward move. So this is actually a legitimate COTA 2 entry just on its own merit. So even though you made a decision to get out here, to get out at this location, if you got out at this location in order to preserve this gain, you can get right back in here without feeling silly, because at this moment you don't know that it's not going to do that. You're protecting against that. And then instead it reverses quickly and goes. That's actually a positive sign. Like, if this is going to go, you'd like it to go right away, not waiting for a long grinding sideways move and then start to go. The sooner that this next leg up starts to work, the better. So this should actually be a positive feeling if you exited here and re-entered there. Now, where we want to get to is that as soon as we take this exit, we want to clear the emotional baggage and get back to the zero state right away, so that we're not trying to overcome the emotions of this trade as we try to enter. I'd like to just enter this trade on its merits. And as I just showed you, this is a legitimate COTA 2 entry on its merits. Independent of whether I took this trade or not, this is still a good entry.